welcome to the Money Tea. Today we'll be talking about how to invest in international stocks. Investing internationally can be so tricky, from language barriers to currency conversions to all these foreign exchanges, but even foreign laws that you have to take into account. At the same time, it is always good to diversify your portfolio, so investing internationally is really encouraged. So today we'll be talking about simple and easy ways to invest internationally without having to pick up a new language or spend so much time thinking about how to convert from dollars to pounds. So number one, the easiest way to invest internationally is through ETFs. So what is an ETF again? Well, it's a basket of goods that usually contain different stocks or bonds that track a certain index. So there are many ways that you can do this. One, you can find an ETF that tracks international funds, and usually this just invests internationally outside of the US. Secondly, you can invest in an ETF that tracks regional funds, and basically this invests in certain regions of the world. So it will either invest in Europe, in Asia, Africa, or the Middle East, or whatever other region. You can also purchase country-specific ETFs, and these will be ETFs that track stocks, say for example in Germany, or in Spain, or in China. So another way to invest in international ETFs will be to purchase one that tracks sector funds that invest in different sectors across multiple countries. So this will be sectors such as energy and gold. So how do you know which fund type to invest in? Well, it all depends on what you're looking for as well as your appetite for risk. So once you select a fund type, the next step will be to choose where in the world you would like to invest. So most financial advisors recommend that young investors should choose funds that carry a lot of risk but also have a potential for very, very high returns. And if you're older, you should seek funds that have lower risk but also know that your returns will be lower. So basically what this means is that if you're young, you can invest in an ETF that tracks an emerging market, versus if you're older, then you want to invest in an ETF that tracks a more developed market. A second easy and simple way you can invest in international markets is by buying American Depository Receipts, ADRs. So basically, ADRs are US traded securities that represent ownership in a foreign company. So say for example, Alibaba, which is a Chinese company, has ADRs in the US, and when you buy an Alibaba ADR, you're buying ownership in Alibaba in China. So ADRs are dollar denominated and trade across various exchanges, so you don't have to deal with foreign language issues or even like foreign regulation issues. So a cousin of an ADR is a global depository receipt. And how a global depository receipt works is that a depository bank issues shares of a company in the international markets. And then they make these shares available to investors inside and outside of the US. So global depository receipts are denominated in dollars, pounds, euros, and many other foreign currencies. A third way to invest internationally is through foreign direct investing. And by this, I mean that you buy foreign stocks directly. And you can do this by opening a global account with a broker in your home country, such as Fidelity, E-Trade, Interactive Brokers, eToro. All of these will allow you to buy foreign stocks directly. Buying foreign stocks should not be recommended for a casual investor or someone who's not very knowledgeable on investing. Just know that there are additional costs like tax implications, regulatory issues that you have to deal with when you buy foreign stocks directly. So only do this if you're a serious investor. So if you want to buy foreign stocks directly, make sure that your brokerage that you're using is registered with regulators in the home countries that it is based in. If buying foreign stocks is not really your thing, a subtle way to invest in international stocks is through investing in multinational companies that derive a lot of their revenues from foreign markets. This will be investing in companies such as Coca-Cola and McDonald's, which derive a significant portion of their revenue from foreign countries. Investing in multinational companies does not truly provide you international diversification, but it does give you international exposure. So basically, those are easy ways that you can invest in international markets. So if you are thinking about investing in international markets, just think about volatility, but also certain risks that come from investing in certain markets, such as emerging markets. Also know that foreign markets are typically less regulated than the US, so they can be more susceptible to fraud. Also think about currency risk, which usually comes into play when you're thinking about investing in international markets. That said, investing internationally is truly very rewarding. So if you're up for the opportunity but can also handle the risk, then it's something that you should definitely do. And that, my friends, is the tea of the day. Until next time, cheers! As always, please don't forget to subscribe.